Welcome back to CryptoBytes, your daily crypto news source. Today we will be unraveling a hot issue about Wang and Ellison who are cooperating with the law enforcement. If you want to know more about the truth behind this, just keep on watching. Zixia Wang, a co-founder of FTX, and Caroline Ellison, the CEO of Alameda Research, have been charged by the government with fraud, according to U.S. Attorney Damian Williams and the SDNY Department of Justice. Williams told the press, quote, "Both Ellison and Wang have pleaded guilty to the charges, and they are both cooperating with the SDNY. Let me reiterate a call that I made last week. If you participated in misconduct at FTX or Alameda, now is the time to get ahead of it," end quote. Sam Bankman-Fried, the co-founder of FTX, is now being held by the United States, according to Williams, who also warned the press that, quote, "Law enforcement is moving quickly and our patience is not eternal," end quote. Williams also emphasized that SBF is on his way back to the United States. The attorney noted that SBF will be transported to the SDNY district and appear before a judge as soon as possible. Quote, "Many individuals in the Bahamas and the United States contributed to the swiftness of the defendant's return," end quote. Williams said the Bahamas was acknowledged by the U.S. attorney for helping with the inquiry. On Wednesday, Wang and Ellison were also the subject of complaints from the Commodity Futures Trading Commission and the U.S. Securities and Exchange Commission. According to the SEC news release, quote, "Ellison, at Bankman direction, Fried's furthered the scheme by manipulating the price of FTT, an FTX-issued exchange crypto security token, by purchasing large amounts on the open market to support its price. FTT acted as collateral for concealed loans by FTX of its clients' assets to Alameda, a cryptocurrency hedge fund controlled by Wang and Bankman-Fried and managed by Ellison," end quote. The SEC also stated, quote, "Ellison and Wang are cooperating with the SEC's ongoing investigation," end quote. According to the CFTC's complaints, Wang enhanced FTX's code to benefit Alameda Research. The CFTC stated on Wednesday that, quote, "As alleged in the amended complaint, Wang implemented capabilities in the technology underpinning the FTX trading platform that enabled Alameda to retain an almost limitless line of credit on FTX," end quote. Quote, "Ellison and Wang do not contest their liability on the CFTC's claims," end quote. The CFTC added, quote, "Both have agreed to the entry of consent orders of judgment as to their liability for engaging in fraud in violation of Section 6C1 of the Commodity Exchange Act and CFTC Regulation 180.1, end quote." The most recent Bitcoin miner to announce plans to seek Chapter 11 bankruptcy protection in Texas is Core Scientific, a once well-known Bitcoin miner. While Bitcoin miners may not have had direct exposure to the now-collapsed crypto exchange, Sam Bankman FTX, Fried's the subsequent turn of events and the ensuing price crash is threatening more of them with bankruptcy. Mining companies are experiencing turmoil and a lingering crisis of confidence in digital assets. Apparently, after being listed on the Nasdaq through a Special Purpose Acquisition Company, or SPAC, in July, Core Scientific's market value has plummeted from a $4.3 billion valuation to just $78 million as of the close of trade on Tuesday. Its stock has decreased by more than 98% in the last year. Despite having a strong cash flow, the firm does not have enough cash on hand to pay off the finance obligation associated with the equipment it was leasing. The company does not intend to go out of business. Instead, business as usual will continue. The company's senior security note holders, who own the majority of its debt, are expected to come to an arrangement, according to sources familiar with the company's finances. A recent offer of $72 million to avert bankruptcy was made to Core Scientific as a result of the financial crisis by B. Riley, one of its key lenders. An innovative financing strategy was put out by the investment bank, which involved giving non-cash pay money to the firm on advantageous conditions with more than 2 years to reach profitability. The bulk of Core's problems, according to a statement from B. Riley, were self-inflicted. Riley continued by saying that these problems may be resolved in combination with, quote, "an open, transparent conversation and continuous cooperation with its creditors and equity holders," end quote. Along with Core Scientific, another well-known firm in the sector, Compute North, which provided hosting for crypto mining infrastructure, declared bankruptcy in September. The company has informed the appropriate authorities and is working to bring the perpetrator to justice while also tightening its security procedures. A release from Anchor team on December 20 claimed that a former team member was responsible for a $5 million hack of the Anchor protocol on December 1. By incorporating harmful malware into a bundle of upcoming upgrades to the team's internal software, the ex-employee carried out a supply chain assault. As soon as the software was updated, the malicious code produced a security flaw that gave the attacker access to the corporate server and the deployer key for the team. The company had previously disclosed that a stolen deployer key, which was used to update the protocol's smart contracts, was the root cause of the issue. However, they did not reveal how the deployer key was taken at the time. Anchor has notified local authorities and is working to have the assailant prosecuted. To safeguard future access to its keys, it is also making an effort to strengthen its security procedures. According to an Open Zeppelin tutorial on the topic, upgradable contracts, like those used in Anchor, rely on the idea of a owner account with exclusive permission to make updates. Most developers transfer ownership of these contracts to a NASA safe or other multi-signature account to reduce the risk of theft. Anchor team said that it did not use a multi-sig account for ownership in the past but will do so from now on, stating, quote, "The exploit was possible partly because there was a single point of failure in our developer key. We will now implement multi-sig authentication for updates that will require sign-off from all custodians during time-restricted intervals, making a future attack of this type extremely difficult if not impossible. These features will improve security for the new Anchor BNB contract and all Anchor tokens," end quote. Additionally, Anchor has committed to enhance the use of human resources. All employees, even those who work remotely, will be subject to escalated background checks, and access privileges will be reviewed to ensure that only those employees who need access to critical information may do so. New notification systems will be put in place by the business as well to notify the staff more promptly when something goes wrong. On December 1, the Anchor protocol hack was initially identified. 20 trillion Anchor reward-bearing staked BNB, a BNBC, were minted by the attacker, who then quickly exchanged them for about $5 million in USD coin on decentralized markets and bridged them to Ethereum. According to the company, it intends to reissue its ABNBB and ABNBC tokens to users who were impacted by the vulnerability and to invest $5 million from its own treasury to assure that these new tokens are properly backed. In addition, the developer invested $15 million to repeg the Hey stablecoin, which was improperly collateralized as a result of the attack. So, what can you say about this issue? You can comment down your answers so we can know your thoughts about this. Also, don't forget to like and subscribe to our channel so you will be notified in our every upload. That's all for today, only here on CryptoBytes, your daily crypto news source.